Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at 3 software companies who may be a great addition to a growth portfolio for the second half of 2021. These 3 companies have very unique and diverse operations with market-leading software products. They continue to grow revenue year after year, and the entire software sector is projected to see exponential growth over the next decade. So in this video, I picked out 3 companies that analysts have a buy rating on right now that all have growing revenue and cash flow year after year, and all have predominantly software-based operations. And of course, this entire sector comes with very high margins, some nice profitability, which would lead to some extended share price and capital appreciation over the longer term. And over the trailing 12 months, the entire software industry has seen some major expansion. Taking a look at the 1-year chart for ticker IGV, which is iShares Expanded Software ETF, it is up by 36%. And over the past 5 years, it is up by 275% overall, which is some major expansion. So the overall software sector has performed very well, and analysts believe this growth will continue for long into the future. And a point I want to make very clear at the beginning of the video is that I understand that companies we're going to take a look at are trading with high multiples and valuations. But right now, as the market continues to trend near all-time highs, it's getting harder and harder to find good deals, and this video's focus on 3 strong software companies that, although they're trading at high valuations right now, they may be attractive investments because of the growth they're going to see over the next few years. So keep that in mind. I do understand the high valuations right now. This video is not about cheap or undervalued companies. It's about the brands that I expect will continue to grow, and analysts still have a buy rating on them right now, even at their current price points. So now, before we jump into stock number 1, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos. And the first software company we're going to take a look at today is ticker ATVI, which is Activision Blizzard. This is a main player in the video game sector with some very strong software products. They currently trade for $94 per share and are now up by 21% on the 1-year chart. The company has a market cap of $73 billion and is now trading with a forward PE ratio of 25.1 and a dividend yield of 0.5%. So of course, with a dividend this tiny, you're here for the capital appreciation and the growth of the share price. And over the past 5 years, it is up by 138% overall, which are some great returns from the video game giant. And this company, Activision Blizzard, is broken down into 3 main business segments. First, of course, we have Activision, and this is the owner of the Call of Duty franchise, which has seen some major explosion as of late through Call of Duty Mobile and Call of Duty Warzone. This franchise has been a leader in the video game sector for over a decade and will continue to dominate for many years going forward. And of course, this is one of the key products under the ATVI umbrella. The second business category is Blizzard, of course the second part of their name, and this owns World of Warcraft, Hearthstone, Diablo, and Overwatch, some very popular video games in more of the PC market. And taking a look at the third business segment, that is King. They acquired this company, and this is a leader in the mobile gaming sector. They're the owner of Candy Crush and Farm Heroes. So overall, Activision Blizzard is a dominant player in the video game sector. Their software products are incredible, they have hundreds of millions of monthly active users, and I believe going forward, the entire video game sector will only continue to grow. And taking a look at their Q1 2021 results, they saw some incredible total top-line expansion. Activision, the segment of Call of Duty, saw some incredible growth, growing 72% year over year. 72% expansion in their revenue for their largest business segment is absolutely insane. Then, of course, Blizzard saw some slight growth of 7% year over year in total revenue, and King, their mobile gaming sector, has the lowest margins, but saw some beautiful growth of 22% year over year in their total top line, which is a very strong sign. And like I've already mentioned, I think video games in the entire sector will see some major growth over the next decade. Right now, video game popularity is at the highest it's ever been. And if you take a look at the demographics of the players and the users, they range from 15 to 35 years old. And that's because the older generation, the people who are 40 plus, never grew up with video games, they never play it, and they don't really have that interest. But fast forward 20 years from where we are today. Go to 2040. All the people who are 20 years old right now and are addicted to video games, it's expected they will continue to play them when they're 40 years old and beyond. So if you fast forward 20 years, this is going to really widen the age gap of the people playing video games, leading to some very large increases in revenue and market size for these video game companies. Right now, if you take a look at the youngest generation, the people 16 and below, they are called the digital natives. They are the people who have grown up with technology in their hand, in their pocket, and always available to them. So going forward, when they get older, video games are going to be a common part in their lives. So right now, when the current generation of players, that 15 to 35 year age gap, fast forward 20 years, when they're now 35 to 55, it's expected they will continue to play video games. Now the overall market for the video game sector will only get wider and wider as time goes on. So I believe this market, although currently is at a high valuation, has a lot of potential growth going forward for long into the future. And what's very interesting right now is that some major entertainment companies within the United States are investing billions and billions of dollars into esports infrastructure. And they want to make Las Vegas the hub of all the global esports tournaments and bring all that revenue domestically into one of the most popular cities in the world. And MSG, for example, is building out the Sphere. It's a multi-billion-dollar project, and it's a new arena solely focused on esports and concerts. It's not designed for traditional, hockey, basketball, or football games. This is built and designed specifically for the growth of esports and different concert venues solely within Las Vegas. It is a very unique design. It's going to be state of the art, and it's going to cost billions and billions of dollars to be finished. And if we take a look at the design, there's going to be one main stage with an 18,000 person audience, all focused on the same area. So this is designed for future esports tournaments to make Las Vegas our domestic hub for the global esports market. So of course, Activision Blizzard is a top player in this industry. I think they'll continue to perform very well going forward, and analysts right now are forecasting 16% annual expansion for the next 5 years going forward, and the stock is considered a buy, coming in at a 1.9, and the current share price of $94 is below the 12-month expectation of $116 per share. So going forward, Activision Blizzard is definitely a software company to take a look at for your portfolio. And now we're going to move on into stock number 2, and that's going to be ticker ADBE, which is Adobe. They currently trade for $593 per share and are up by 33% on the 1-year chart. They have a market cap at $278 billion with a forward PE ratio of over 48.4. So this is another leader in the software sector, and I'm sure we've all used Adobe products before. Right now, they operate under 3 main business categories, which include their Adobe Creative Cloud, the Adobe Document Cloud, and the Adobe Experience Cloud. So they target 3 different types of markets, and overall, they believe their business can achieve mass domination in the software, commercial, and even personalized space as well. And if we take a look at Q1 2021 numbers, this software beast continues to grow. Revenue growth of 23% year over year is a great way to start out 2021 with record high cash flow from operations just below $2 billion in the quarter. So this software beast continues to dominate and bring in more and more revenue year after year. And if we take a look, why Adobe remains a leader in the sector is because they continue to innovate and upgrade their products. For example, within the Creative Cloud suite only, one of their business categories of the 3, they continue to come out with new products year after year, improve their existing models, and overall, I don't think there's any other competitors that can actually come on and compete with Adobe in the Creative Cloud sector. For a monthly subscription fee, you can get access to all these different services, and I think right now, Adobe is pretty much the leader and will remain in the top spot for long into the future. They have such a wide product mix, their products are already widely adapted in the market. It'll take a lot for any other company to come in and bump them out of this leadership position. And if we take a look, they continue to grow and believe there's multiple different growth drivers to expand the company going forward. Although they are pretty much a household name in the business sector, they don't think they're done. They think there's so much future potential from all these different growth drivers that will bring the company to a larger place going forward compared to where they are today. And if we take a look at the numbers, year after year, total revenue continues to grow. Top line is expanding at a CAGR of over 20%. And because this company is solely focused on software products, it allows them to achieve very high margins, even at massive scale. So we can see a 43% operating margin on the company's total top line is extremely impressive. And if we take a look at the income statement, as revenue continues to grow from only $5.8 billion back in 2016, all the way up to over 14.3, that's a major expansion, almost tripling in a 5-year span. This company is highly profitable. 14.3 billion of total revenue, and their bottom line now sits at over 5.5 billion during the trailing 12 months. So overall net margins above 30%, which is a great sign for a business within the software sector. So overall, Adobe, I don't want to go into detail too much about this company. We already know what they do. I'm sure many of you have used their products. They're market leading in the business world. In PDFs, there's hundreds of millions of pages in PDF format sent and used every single day. So going forward, Adobe right now, I think will remain a dominant player in the industry. They have continuous momentum growth. And why I like this company, and I included them in the episode, is because they generate more than 75% of their revenue on a subscription basis. Subscription revenue, I believe, is the future. Charging a monthly fee for your services and allowing that cash flow to come into the business every month, every quarter, or every year is a great sign. It leads to predictable cash flows. It allows you to actually do price increases over the long term and will lead to major revenue expansion for many years to come. And for many businesses, once they find a service they enjoy, they're pretty much loyal. It's very hard for companies who already build out a full infrastructure around a specific service to just get up and leave. So because Adobe is already used by tens of millions of businesses all around the world, I think the company is in a very good position. And going forward, analysts agree with me. They're forecasting over 18% annual expansion for the next 5 years going forward, and the stock is currently considered a strong buy, coming in at a 1.7, and the share price of $593 is still below the 12-month expectation of $618 per share. So this was the second software company I believe is definitely worth taking a look at. I understand they are on a run up right now, but maybe if we see a pullback going forward, it may be a nice company to buy on a dip for your growth portfolio. So Adobe is software company number 2. We all know their operations, and I think because they're a main player of our current business environment, they will remain there for long into the future. And now we're going to move on into software company number 3, and that is ticker MSFT, which of course is Microsoft. The second largest company in the world is up 34% on the 1-year chart and has a current market cap of over $2 trillion, a forward PE ratio of 35.7, and a dividend yield of 0.81%. I personally believe Microsoft is one of the strongest companies in the world, if not the strongest. They are the largest position in my personal portfolio, and I still continue to add more, even on the massive run-up. And right now, some analysts believe, especially from Morgan Stanley, that the run-up is not over. This company will continue to deliver very strong numbers, and the share price can climb even higher. And if we take a look, Microsoft was a slower growing company, but over the first quarter of 2021, they actually saw the biggest revenue growth since 2018. So when the company's growth rate was declining, they picked it up to start out this year. The pandemic actually helped out their business, and overall Microsoft is kind of turning around. It's becoming a major growth player within the tech sector. And the company has a very wide product mix of existing services that are now focused on software. And they've done a great job of transitioning their old products into new software-based subscription models. For example, Microsoft Office, a product I'm sure we've all used to not be paid on a subscription model. When you originally bought a computer, you went and bought the service and you got the features downloaded onto your computer. But now Microsoft has changed it up, and they have 300 million paid users generating monthly revenue for the business, all through the new software base, MS Office. So of course, this is a cash generating machine for the business, and going forward, this will remain the number one player in the overall business typing Excel-based industry, and there's no other competitors that can knock them out of that position. And of course, a few other products, I'm not going to list them all because there's a massive list, include LinkedIn, which is a social media software network that has grown to be a main player in the business world. And the company also has Microsoft Dynamics and Viva. So overall, the company's Azure platform is software-based, and they have so many different good things happening that this business, I believe, will continue to grow for long into the future and remain a dominant player in the software industry. It's hard for a company like Microsoft, and if we take a look at their income statement, that generates so much revenue year over year, close to $160 billion in the trailing 12 months, and because they're extremely profitable, of over $56 billion of profits over the past year, it's going to be hard for any other small competitor to actually come in and knock them out of the market leadership position. If we take a look at their balance sheet, they have over $125 billion sitting in cash. $125 billion. This company can pretty much do whatever they want at any point in time. So right now, Microsoft, I believe, will continue to dominate the industry. I don't think there's any other competitors that will knock them out. And if they are, I think the company will just adapt. They've been adapting for the last 20 plus years, and I think if any other competitor does threaten them, they'll either buy them out, completely change their products to adapt and be better, and the company's pretty much got unlimited resources to do just that. So although they are already worth $2 trillion, I don't see the growth slowing down anytime soon, and neither do Wall Street analysts. Right now, they're forecasting over 17% annual expansion over the next 5 years, and the stock is currently considered a strong buy, coming in at a 1.6, and the current share price of $277 is below the 12-month expectation, right around $300 per share. So overall, Microsoft was the third software company to take a look at right now, and in this episode overall, as we wrap up and conclude, we took a look at Activision Blizzard, a leader in the video game sector, then of course Adobe, a main player in the commercial world, and finally Microsoft, a company that's the second largest in the world with multiple different products, all software focused. So of course, these are not the smaller companies, there's no mid or small cap names, these are the large beasts that dominate the sector right now, and I believe will continue for many years going forward. So thank you for watching the video, please hit the like button and subscribe if you already haven't done so, and I will see you in tomorrow's episode.